years. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Listen now.
Good morning. It is Monday, December 1st. I've got a whole new setup here, and I would take that camera off and show you. But it's a whole new setup. I got a widescreen monitor over here. I got my laptop over here. Bear with me. I'm still getting used to this. I just did the paid newsletter. I did a paid newsletter for the December watch list. I released that one. Also, it is now 9:12 in the morning. So I'm recording this in 2.5 hours at 12 a.m. I'll be on there at 12 p.m. I will be on there at 11:50 East Coast time. And we'll be doing the Alpha Picks selection. Remember, Alpha Picks is a data-driven portfolio where you can get it for a savings of $100 just for a limited amount of time. This ends very soon because it's Cyber Monday. But it's $399 for the year. It's a list of stocks, again, up 240% versus the S&P at 74%. Go to Linktree to get the most recent updated selections right here. The third link, Alpha Picks, right there. But it is a portfolio of stocks that has beaten the S&P. That's key. The second thing is that you get a pick on the 1st and the 15th. Now, what I do is I go live on Substack to actually go and buy the pick and then scalp it. Sometimes you can get within just a few minutes a 10% gain if you're quick enough. That's not how it's built. But again, that is part of what I'm going to do today at 12. Just so you know, coming up on this particular podcast, I'm going to kind of go over, hey, the Japan trade is peeking its ugly head again. We'll go over some of the charts. What I do want to show is a monthly chart because I do show monthly charts just to keep you and me as up to date as possible. Now, the month of November was down 2.49%. It's a big, big drop. It might seem like that way. March was down 8.32. February was down 1%. Okay, those are the only 3 negative months this year. 3 negative months this year. The RSI is still at 75. We were at 78. The MACD still hasn't crossed down. It's still extended. And we're heading into a very seasonally weak month. It's not, even though it's up 70% of the time, look at the mean change in December. That is minus 3.8%. So again, it's a seasonally weak month. I urge you, have a plan for the month of December. The 4-hour algorithm on QQQ got you in at 603. You're trading at 614. We're down 0.77%. And if you think it's safe, this is when you want to buy. If you're buy on trend lines where there's a clear oversold signal, there are two things on this chart. There's the RSI at the bottom, and when it bottoms out, you buy. When it hits the trend line, and this is anchored a weekly on SPY, anchored right down there with COVID. That's your cheat code. There's a clear oversold signal like the RSI. You're playing chess while other people are playing checkers. Again, that is just a cheat code. And are we headed for a rally? Because we had Zweig breath thrust. I have no idea. Go and check it out. In April, that was widely mocked as many. S&P 500 up nearly 23% 6 months later. The S&P 500 higher 6 and 12 months later every single time. We may have another trigger of this Zweig breath thrust. Again, go and Google it. It's anticipating a rally. I've said it before. The economy, earnings, and the Fed. And Trump said today, hey, he's got his pick for the Fed. And guess what? They're going to lower rates. So if you're bearish and you're saying, hey, we're going to go down, I just want to read to you what you're up against. We have Trump saying he will keep stocks at record high. We have $600 billion a year in Magnificent Seven CapEx. We have the Fed cutting interest rates by 3%. Global AI infrastructure spending at $1 trillion a year. Fed ending quantitative tightening in 2 days. U.S. deficit spending greater than 6% of U.S. GDP. That's not a great thing, but it's U.S. spending which pushes the market. Nvidia larger than all but 5 national stock markets. Record corporate buybacks at $1.2 trillion coming in 2026. Trump saying he will completely cut income taxes. Trump promising $2,000 stimulus checks. You want to be bearish? And you want to be bearish. Again, we have all of that heading into it. Now, great news. If you bought Cisco at the peak, you finally, at 2000, you finally got back to even. 25 years later. 25 years later. So know exactly, and if you think this is a bubble, by the way, like back then, just take a look. Because if you think this is a bubble, we're not even close to the top. Could we go higher? Absolutely, we could go higher. Even if you are bearish like Michael Burry, who was like 4 years early on the Big Short. Even if you think this is a bubble, we could still be early. So it's in me. I'm watching monthly charts, and the monthly down 1% in November doesn't make sense to me to pull out of the market. But we've got something peaking up here. And this is what I want to point out to you. The chart that should terrify every portfolio manager on earth, it's Japan's 10-year. And the 10-year bond with Japan, it's kind of triggering, that's what's triggering a lot of the Bitcoin stuff that you're seeing today and a lot of the weakening. And if we go back to QQQ, and I want to go back to, we can do a daily, and we'll go back to August of last year. I want to point out August of last year. That was April, and we'll just bring it back to August of last year. See this big dip right here, that huge dip into August? This was what's called the Japan unwind trade, and this is similar to what's happening now. The weakness that you saw and the bottoming there would indicate, and what it did was the Japan started raising rates. And what that does is makes Japan people start to sell U.S. bonds, which pushes the bond rates up, which pushes the market down. If you were to head back to this trend line, and we've got that trend line there, it can probably be moved even higher, but let's just say that's the trend line. If you're going down to that trend line, you've got an 8% drop, and that could hurt. And if you want to read more about Japan's unwind trade, you can read about it there. But again, it's just a danger. It's something to keep an eye on, not something where I'm pulling money out of the market. Because again, the economy, digital sales jump on Thanksgiving after AI agents don't take the day off. AI agents are shopping for people. They're shopping for, so far, sales during this holiday season are up, points towards a strong economy. Again, economy, earnings, and the Fed. And you're riding the gravy train, dividend stocks carving out 20+ returns plus huge dividends. You want a list of 11 that are have great dividends and are carving out great returns as well? That's like a double whammy. Remember, the larger the dividend, typically the less the stock can gain because they're not investing in the business. They're investing in giving you, as the shareholder, dividend earnings back. This is the best of both worlds. Not only do you get dividends, but you also get 20+% annual returns. Never guaranteed, but these are stocks that are in the quant and you can go and research them. Again, if you get the bundle, you have both Alpha Picks and Seeking Alpha Premium. If you want just Seeking Alpha Premium, you can get a free 7-day trial. Everything is here on Linktree, including Seeking Alpha Pro, which gives you the daily listing of stocks that go from a buy or a hold up to strong buy. And so that's been a good list that I've been able to use. It's expensive, so it's just for those traders. There are top trending AI stocks according to Seeking Alpha Quant's rating, and that's what I like, the quant rating, okay? And this takes you over some of the top AI stocks in the quant rating and their market cap and everything. Go and do your research. This is the type of article that I use to set up the December watch list. And there's a few that I see in there that are in the December watch list. If you go over here, the December watch list, I just released it. So these are the types of articles that I use. Again, using both TrendSpider and Seeking Alpha to build the case. Now, bear case on Oracle may actually be bullish. The bear case on Oracle right now is that they are spending too much. They're just spending too much. That's the bear case on Oracle. Now, what they're saying, Deutsche Bank is saying, is that high spending, it might actually be a good, relative to companies' guidance. Our work suggests a $4 reduction in earnings per share to $17 and a $10 billion reduction in free cash flow. Okay, discounting these numbers back to present would suggest the company is getting life if any credit for its business with OpenAI is in the current share price of $200. Maybe Oracle's spending is actually pretty good. What does Wall Street think that Oracle is worth? Well, Wall Street says that it's worth $342. That's a 70% upside. And up until that AI deal was announced, they were at $349. Year to date, you're still up 21%. 6 months, you're up 23%. But look at that decline. And if we go over to the 4-hour algorithm and look at this one, the 4-hour algorithm has had several losers right here, which haven't been good. You're still outpacing. You can see it down there. 108% is what the 4-hour algorithm gets you versus 72% if you bought and held. But it doesn't win all the time. Again, you had this 85% gain. You had this 18% gain. It doesn't win all the time. But if you're finding entries, and this is a stock that you like, you've got a gap up above, your MACD is super low, your RSI is at 34, it's completely oversold. And what has happened? The weekly has turned around. The RSI is at 40, the MACD is coming down. So technically, this is a pretty good stock. Fundamentally, that's the question. Is it still expensive at 29 times forward earnings? You know, its growth at 9% revenue growth year over year. Not my thing. But the Seeking Alpha Quant ranks Goldman as large cap stocks with largest short interest. What's ironic is this list includes STX, which is Seagate Technologies, which is one of the top stocks in the quant. It's got a 4.98 out of 5 rating. And this one has a huge short interest. Why? Because year to date, it's up 220%. Over 6 months, you're up 135%. Shorts think that it's run too far too fast. So I like that one. I like Seagate. I'm not looking at the short interest. Google is selling 500,000 chips. Could boost earnings by 3%. Is Google topped? It's at $320. If you didn't like Google at $170, at its 52-week low of $142, year to date, it's up 68%. Still a strong buy from Wall Street. Their price target is $311, which is 3% downside. But again, I point out this article that Morgan Stanley says it could boost earnings by 3%. It has just been on a run. And if you think I'm the only one that journals, here's Shai telling you about his biggest mistakes, biggest growth portfolio mistakes, 3 of them. Not building the size in ONDS, believe the AI utility names like IREN and Cypher were built for what I call overflow. He didn't realize. What I underestimated was how long that imbalance would last and how insatiable the demand for compute would be. He also put Hood on his watch list at 20, but never added because he viewed it as a commodity. It's not. It's a growth stock. And Hood is one that I own and I will be adding to. So if you don't think that journaling's important, that's important. Now, I want to point out today, after the bell, we've got MongoDB, which may take a little bit of a thing. But my personal portfolio, I own a ton of Credo. Why? Because it's in alpha picks and it's a strong buy in the quant. I think it's a strong buy in the quant. I think it was, at least when I was adding to it. But Credo, it's a hold in the stock. It's not even a buy. Wall Street actually has a $162 target, $162 stock. They report after the bell today. Maybe an interesting one, maybe one you want to look at, but I brought this one up many times before. I have alerts on it. It got a buy here at 145, and where are you trading right now? 173. The 4-hour hour makes you 375%, which I am perfectly fine with trading a portion of it, but I am also a buy and hold person that has gotten that 846%. It is up huge. I've got Unify, I've got CrowdStrike, I've got Okta, I've got Snowflake, I've got Dollar General. They're all coming up this week. Oracle, in fact, is reporting on the 8th, which I think is next week. Then you got Broadcom and Costco. So earnings are still out there, but you've got a lot of red on the screen, and most of this are growth stocks. Like Hood is down 4% in the pre-market, and we're just about to open up. You've got Bitcoin, IBIT is down 5%. You've got NVIDIA down 1.2%. Qualcomm down 1.2%. You've got Shopify down 4%. So there's a lot of red on the screen. We'll see what happens. I will see you at 12 p.m. today, noontime, to do the alpha picks. Remember, all of these sales are still going on, but they end soon. TrendSpider, if you want the 4-hour algorithm, it is going on for another 15 hours. It's Cyber Monday. Once this is gone, you're going to see these regular prices start up. And then I'm going to say, well, you know, you could make $82 a month on the standard plan. You could make $137 a month on the premium plan. You know, the $321 a month for the advance, that only, when that goes up to $321, you only get 3 training sessions, not the 52 like you're seeing. And then the 3 training sessions here go down to 1. So again, take the opportunity to get TrendSpider and to get the bundle with premium alpha picks. If you have any questions, you can hit me up. Everything is on Linktree, even my email address. I will talk.